Welcome to the Perpetual Growth Podcast with Zach Palmer, the show where we explore the strategies, insights, and stories that empower you to grow your business, strengthen your relationships, and elevate your health. Because growth isn't just about what you achieve, it's about who you become along the way. Today, I am thrilled to welcome Stacey Seguin. Stacey has worked with companies from startup to 100 million in top line revenue and has a special affinity for multi-entity entrepreneurs who want to understand the relationship of their P&L and balance sheet so they can manage their enterprise. As a strategic CFO, Stacey has the best seat in the house to see your whole operation, from strategic vision to staff turnover and systems and processes. You need someone who can show you the money from the client perspective all the way. So let's dive in and take another step on your journey to perpetual growth. Stacey, welcome. Super excited to have you here today.
Yay. Thank you so much. I love the intro. That's fantastic. I do that. That's really cool. And I was in a conversation yesterday with someone, and his wife was overhearing, and she was like, "Do you do this all day?" And I was like, "Yes." It's about a 40-minute conversation. And she's like, "I'd be exhausted." I said, This is a warm up. I get going at the 90-minute mark and I love it. And I have to tell you, like, Zach, I didn't start out to be an entrepreneur. I avoided everything I possibly could that had anything to do with accounting or business.
I think most entrepreneurs do, right?
Yeah, it was like, I'm a sociology major. I'm going to get as far away from it as possible. And way back, I had a friend in college who said best advice from his dad was take some business classes, because no matter what you do, you're going to work for a business or you're going to run a business. So the more you know, the more value you can bring. And I said, not for me. No, I'm not going to do it. But I had this fateful conversation back in 93. And I had just come from an interview with PricewaterhouseCoopers, and it was like a combination of accounting and consulting. And I didn't know anything about it. And I thought, big business or small business? I met a person who was starting a small business, and I thought, ooh, I have a lot of experience to share. And so that's where my journey started. And we co-founded a private investigative company and took it from bootstrap startup, making around $400 a month, barely paying any of the bills, to a multi-million-dollar nationwide service provider. And After about 10 or 15 years in that, I was like, there's got to be a better way. This is hard. And after this length of time, we should know what we're doing. The problem was we'd walk out of our CPA's office every single year with a pat on the back, just don't make so much, or just don't spend so much. And it was the worst possible advice we could get. And we didn't know what to do. And so I didn't solve it in that company. I know that strategy and focus were essential, and we were opting for not those things, for flexibility and being nimble. And we sacrificed a lot in that process. So when I got the wild hair back in 2015 to start a bookkeeping company, I thought, what's a marketable skill and what's something that I would like to do in the future, and something that I enjoyed doing when I was in my 20s. And that was around accounting and finance. I discovered that I was good at it in the company that I co-founded. I had the wherewithal and the capacity to track down the question marks and do the analysis and try to figure it out. And so I thought I would just share that knowledge and expertise. And I spent about 3 years doing that, and it wasn't working. And I couldn't figure out why. And so finally I decided, instead of struggling to figure out why this isn't working, I just need to ask a different question. What do you want instead? And bam, that changed everything. That one question. So going from total struggle with steam coming out of your ears and eyeballs and the pain and the suffering and that struggle, being in that struggle bus, it's just like, no, it doesn't matter why, it's not working. It's what do you want instead? And start going in that direction. And literally within 2 days, everything changed.
Amazing. We ask better questions and we get better answers,
Absolutely.
right?
Absolutely. And, I've done a lot of reading, and probably every surface in my house has books on it, books or papers. But one of the things that I've learned is struggle is a choice, and it's who, not how. It's how, not why. right? When you ask why, you shut off communication. When you ask how or what's in it for me, or what do I need to learn in this, you're open to the opportunities. And there's always learning, always. And that's one of the things that I like about your podcast is that it is focused on growth. And a lot of times in business, we're looking at top line revenue and growing team and scaling. But who are we as individuals and how are we showing up? How are we leading? And I've come to believe that that we all lead our lives by choice or by default. And the greatest freedom we have is the freedom of choice. And so what do we have to do to stay in that place, to have options and choices and to see possibilities when there's chaos all around us? So.
It's one of my favorite quotes. It's been said that God gave us control of one thing, our minds. That must say something.
Ooh,
It's
yeah.
really interesting.
And that's a super hard thing to do. And so in fact, I was talking with a colleague the other day and she was like, man, I can't get my mind off of a couple of things. And I'm just really struggling with this. I was like, okay, time for an interrupt. We need to interrupt. We got to move. You got to go do something else and get your mind off of the thoughts so that you can get back to that place of seeing possibility and focus.
Mm-hmm.
Yeah.
No, it's 100% true. I mean, the challenge that happens, what most people don't realize is they're playing a broken record over and over and over. And 9 times out of 10, that record's playing a really negative story. And we end up reinforcing and creating a new focus. And as we know, where focus goes, energy flows. So the more you think about the thing that you don't want, the irony becomes the more you attract that thing or multiple things around it, because misery loves company, as it's been said, right? It's like,
absolutely 100%.
My an old coach of mine said it to me this way. He's like, Zach, have you ever fed a stray cat? And I'm like, maybe, I don't know. I'm like, well, why? He goes, well, what do you think happens when you feed a stray cat? I'm like, it comes back. And he goes, yeah, what happens if you keep feeding it? He goes, it comes back with friends. And he's like, stray cats are our problems. And he's like, you spent so much time focusing on the problems that you're missing all of the different opportunities. We gotta have to ask more powerful questions. Now, I love something you said too. You talk about, and there was a little bit of polarity I found in what you said, and I would love to hear you speak to this. It was, you talk about the who, not how. And I also want to dive into the data and analytics, and because I think so many small businesses, I mean, I know when I was starting taking over a company at 19 years old, I didn't know what I was doing. And I was just trusting my bookkeeper and accountant to give me some sense of direction, which I realized was vague at absolute best. And most often, I think small business owners, particularly when they're new to the industry, and if they're the artist, the skilled producer, the one that loves doing the thing, they don't necessarily love doing the accounting and all the other work that goes around it. They just want to do what they enjoy. You don't necessarily dive deep enough into the financials. And the reality is all of the data, all the numbers, all of our sales figures and expenses and taxes and everything. I mean, everything's trying to tell us a story. And if we don't have clarity, well, if we don't have accuracy, first of all, then we're looking at a fuzzy picture. And then we've got to be able to interpret that and look at the blueprint so that we can make more educated decisions about what to do next. And one of my mentors used to say, and this is a long way of coming full circle to, never get stuck in the tyranny of how. It's like so many people get stuck on how do I do this, that becomes one of those broken records we can play. And you said something really important, which is who, not how. And that's another really, really important mindset that so many of us need to digest. And I think, I've heard it broken down to me numerically, which is one of the times for me it helped make the most sense. From your perspective, and I guess as we're looking at this from a financial standpoint, when do you look at a who? Who is the who you might start with? Because new level, new devil. I mean, most people are going to start with a bookkeeper. You'll have an accountant, hopefully, for your year-end taxes. Accountants all operate on different levels. Some will just do the accounting, while others will actually provide you with more strategic guidance. And then as a CFO, you're the one that's really providing the strategic guidance and insight. So I would love your perspective on the different roles that people should be considering relative to their stage in the journey, how it could be impacting them, probably more in the insidious ways that they're unaware of. It's like, if you
Yeah.
get too focused on top line revenue, that can be growing, but if your expenses are keeping up or exceeding the top line growth, it doesn't matter. So it's
Yeah.
like that only
Well,
says one
so
thing, you know?
that's a huge conversation. So let's
Yeah.
start with simplifying it, right?
Yeah.
And the accounting and bookkeeping, we live in an age and stage which is fantastic because we have transactions that are downloaded from the bank. And I would say probably 98% of the clients that I'm working with are thinking that's sufficient. But here's the problem. The bank does not know the purpose of that money. The only thing the bank knows is it's money in, money out. Your accountant, your bookkeeper, your data entry person, all of those people are integral to making business sense out of the transaction. And so working with a person who understands accounting is important, but an even better place or resource is someone who understands business, right? And can make meaning out of that. And so the thing that I find, or there's so many things that I find, but one of the things that holds us back is even at a $5 million enterprise with multiple entities, they're still relying on bank feeds to make meaning out of their numbers. And then as a business owner with that condition,
Mhm.
they're not seeing the operation across entities. So they don't know if they're sending money to one of their other operations or companies and it's being treated as income, or it should be really something else like a contribution or a distribution in the equity section. So it's just a mess. It can become a mess. There's another thing that I think is important, and that's especially as you're growing from that startup phase to the first million and then beyond, the amount of experimentation in your chart of accounts makes it so that you can't see. And so if you find yourself in a position going, well, that's not right, that's not accurate, we don't do that anymore, that's not a service, that was from 2018, like, we need to restructure your chart of accounts to reflect the business you have today. And that is a strategic conversation. That is an operational conversation. And your standard bookkeeper cannot go to that depth. And so you're really limiting yourself if you're just working with someone who is a data entry clerk and not someone who understands what your vision and your mission and your operation are supposed to be doing. So I'll pause with that and get your input.
Hmm. What I would be curious about is there's several different things that came to mind as you were talking just now. One, it brought me back to a time where we had transitioned our point of sale system. And well, actually we'd integrated a point of sale system. To that point, everything was still being done old school, written out receipts, et cetera, which what I didn't realize at the time was the way that the point of sale was interacting with our bookkeeping system, it was creating redundant entries.
Mm-hmm.
So there was a short period of time where our perceived incomes were inflated, and relative to cash flow, it's just one of those things that if somebody isn't acutely aware and you don't have the right people that are helping you set up the systems and integrations to begin with, it can sneak up and all of a sudden you think you've got a lot more money than you really do.
Right.
And so I just want to speak to how those little subtleties can have a really major long-term impact on where you think you are. And if you don't know exactly where you are at in business, you're flying blind. It's hope and a prayer. So the importance of bookkeeping, accounting, analytics, it's like to me, and I don't know if you would agree with this, but it seems like it's the thing that people avoid the most because they don't want to know. And if they don't know, then they don't have the problem. It's just like, if I don't look at it, it's not really there. Kind of like a little kid. It's like, you can't see me picking my nose if I cover my eyes, right? I had a friend that did that
It didn't
in
happen.
kindergarten, right? But the other side is like, you talk about the different levels of perspective and insight that they can provide. The flip side of that is, I think, another thing that a lot of entrepreneurs do. I did this in an attempt to save money. I learned all of the bookkeeping strategies from the accountant. So, I mean, I knew how to do all of the fundamental processes, but I still, for the better part of 15 years, didn't really understand the story that the numbers were trying to tell me. And what I would love to have you speak to, for particularly for people that are, um, It's probably more common sub 1 million, I think, is at that is the stage I was at then, where, you know, why is it wise to go external? Because so often, and it's not just bookkeeping, we do this in a lot of different places, and it's the same idea. It comes back to fundamentally who, not how. What is your time worth? Where can you generate? What are the biggest revenue generating activities that are going to create the most impact and the best outcomes for the company? Your
Yeah.
time needs to be there. And looking at that in comparison, if I can generate $100 an hour and I could pay this person $30 an hour, I need to be paying that person $30 an hour all day long to do that thing. And then I can go do more of the $100 an hour thing, right?
Yeah. Yeah.
How do you get that idea across to a small business owner that because we get myopic, we're looking at the problem again and thinking that we're doing the right thing, but in reality, the focus is going the wrong place. Could you
Yeah.
speak to that a little bit?
Yeah, a little bit. So in my experience, I'll speak specifically about this particular situation. Client I was working with was spending all of their time in the nitty-gritty and the details and making sure that the pennies matched and that this was right and everything was done. They spent all their time producing and no time analyzing. And it was frustrating because you spend a whole month cleaning it all up and making it accurate, tying it all out, perfect. And then you start over the next month and you never got any time to analyze. So if when you're in that position of needing to analyze what's happening, that's the first place to pull yourself out of the doing. And if you find yourself questioning, well, this isn't right and that's not right, and then that's a process problem. That's not a you problem. And as business owners, we think it's us. We think we don't understand the numbers. We can't do accounting. We just don't have the skill set. So we put it on the back burner and it doesn't matter.
Which who
And
wants to admit that too? Because
it's
business
hard.
owners have,
It's hard. And
we got to guard our egos, and sometimes for the better. I'd be,
yeah.
it's another polarizing conversation. But that aside, go ahead.
Well, there's that. And then I think the other thing that's really important to understand is when you're in a market condition where there's plenty of money in the market and you're profitable, you can be really lax and still be profitable. One of my favorite quotes comes from Brent B. Shore's book, The Messy Marketplace. And he says, every business is a loosely functioning disaster, and some are profitable despite it. And that's true. And that I felt a lot of confidence coming into a CFO space because I had worked with $100 million companies for whom I thought there's no way they have problems at that level. They do have all the same problems that we do at 100,000. It doesn't matter. There are whirlwinds and cycles as you're growing. And so it's just at a different level. That's all it is. But it's still business. Business is business no matter what level you're at.
Mhm.
And the other thing that I like to teach my entrepreneurs that I work with is that as an operator, you're spending all of your time in the P&L. It's money in, money out, and how much money did you have left over, right?
Mhm.
When you become an investor in your company, you start looking at the balance sheet. What are my
Yes.
assets doing? What are my liabilities doing? What's my equity doing? It's a
Mhm.
different conversation. And as a real estate investor, we have that all day long in deal analysis, but
Mhm.
we don't have that when it comes to our company. And so being able to understand your gross profit margin and what are the drivers for that, the value in your company is not in your P&L and your balance sheet and your cash flow statement. The value is off the books. It's your systems and your processes and your culture and your people
Mhm.
and the what you're doing. What is the market and what is your service and how aligned are you with the need? That's where the value is. But we often don't ever get to that point because our accounting isn't accurate beyond the P&L.
Mhm.
Right? So net profit, that's the number we're all looking for, but you got to know where it goes on the P&L and what's happening to it. And so when
Mhm.
I became a profit first professional, that started the journey of me understanding
Mhm.
how the P&L flows through to the balance sheet and then to the cash flow statement. And that's where you have power and control.
Mhm.
When you can learn how to drive your assets and your liabilities and the difference between those two, then you have the ability to move forward and navigate in any market condition.
Yeah, I was blessed to have had the opportunity to uh, received some education under a gentleman by the name of Keith Cunningham, who's one of the financial greats. Keith, yeah, not only, I mean, he's about the only person I've ever met that can make a financial conversation entertaining.
Yeah.
He is absolutely priceless as a personality. But
Yeah.
I mean, thank God. I mean, I remember leaving that conference going, I've been flying blind for 15 years. I had no idea what my business was really doing, what was going on. And the thing that's so important about this too, that I hope everybody's hearing is, and well, actually, let me dial it in, is you can look at so many nuanced decisions. Whether it's a product or a service in your company. Oftentimes we want to create more production or more sales volume with one of these products. But if you're not aware that profit margin is now shrinking and you're trying to inflate that volume or just a dying category altogether, you could literally be running into a headwind or like, just doing something that or making decisions that are not ultimately going to serve the company or add to the bottom line. And one of the things that was so profound to me from an investment standpoint, and I think where this correlates is, I remember in one of Tony's books, he talks about as little as a 1% fee that's tacked on your investments can half your lifetime earnings. Now, I don't know if that's quite accurate, but the point was it can consume a tremendous amount of your money. So if we take that same ideology and use it to more strategically look at all of our products and services, decisions we're making, where we're making investments, what's an expense, what is something that's part of our long-term growth strategy. All of these things are super necessary so we can be making decisions strategically and not just based on our emotion.
On
Yeah.
gut feel or past history. I
Hmm.
can't tell you how many times I've gotten into a conversation with a business owner or an entrepreneur and said, no, there's no way that number can't be right. There's something wrong. We're not losing money on that. And there was a particular situation for a company that did window installations, and they had their estimate. Everybody was following the rules. Everything was working. They'd been doing it for a long time. And I started to notice that they were losing their profit margin was going down. And I'm like, you've got a pricing problem. I don't know exactly what's going on. And he assured me, there's no way, not possible, not happening. I said, you got to go back and check. Something's changed. Something's off. Sure enough, one essential item that is required for every job they did went up by 13 cents, and it wasn't reflected in their estimating side. And so the fact that he believed in his people so much, which he should, they were doing a
Right.
great job, just one little thing was off. And because they were following the rules and using the tools and everything, nobody recognized that this was happening until it hit the accounting and the
Yeah.
margins were off and he was going in the wrong direction.
Yeah.
Right. So you've got to know your numbers, but you also need to know what's working and what's not working and where there's friction in the
Hmm.
company and solving for that. And that makes a huge difference. And you were talking about the 1%. So when I work with my real estate investors, getting them to improve their gross profit margin, just 2 to 3% will make an astronomical difference in their entire organization. It takes the
Hmm.
pressure off, and it's such a small little improvement. It doesn't take a lot, but it has an astronomical impact.
Hmm. It's interesting. One thing you just said reminded me. Do you find that half the time what you're battling is more of the emotional mind than the logical mind? Particularly as an entrepreneur, particularly as a artist or skilled producer, you tend to fall in love with your product.
Mm.
And, while you may love the clients and while you may have an extreme desire to serve, when you've worked so hard to build something, you can start to kind of convolute your own image of what it means and when it's appropriate to pivot, innovate, ideate, or eliminate altogether. And it's a hard conversation to have because it's like, you feel like you're throwing your baby out, right? But the ultimate thing is we're not there for us. We're here to serve others in business. It's one of the
Yeah.
first things that you said. And if
Yeah.
we're not doing an effective job solving their problems and creating the outcomes they desire, then we don't have a business anymore. So it doesn't matter what we want. And we've got to be able to take a conscious step back and know when our emotions are getting involved so that we can take the step back and look at the big picture more holistically and start making decisions based on what is going to produce the best result for the clients and, also keep the company afloat from a financial
There,
standpoint.
there's a place where you can just chutzpah it, right? You're just pushing through and everything is working, right? But when you've got team and you start to think about how is this going to last beyond me? It's not just me driving things forward. And if I don't show up, then things don't happen. We've got to get our team rallied around something beyond us as entrepreneurs so that they're willing to step up and go beyond and push things beyond where you can take them. I love the African proverb, if you want to go fast, go alone. If you want to go far, go together. But especially in the real estate space, it's all about deal analysis and it's all about deal flow and it's all about getting to the next one. But if you're going to have a sustainable business model, you've got to figure out why you're doing this, what's important, where do you fit? How do you get people surrounding you who want to go further than you can imagine right now? And so I feel like that's the first step is what's our why? Why are we doing this? What are we solving? And sometimes it's our own creative endeavor, and that's not enough to get people to go beyond. And that's not going to be sustainable in terms of serving the marketplace because the market doesn't care why you started, but the market will care if there's something bigger, if there's something bigger to be focusing on and a bigger why and a bigger impact, then you've got something that's motivating and can move forward.
I have
Hopefully.
a really interesting question, and this is probably a little bit more philosophical. Um, but I can tell you one of the things that bothered me from my time in the fitness industry. I mean, I had specialty fitness retail stores and boutique training studios, were product-based, service-based, B2B, B2C, government contract. I mean, I kind of had a little bit of everything.
Everything.
But
Yeah.
one of the challenges that I felt in the fitness industry, um, really was I don't know I don't want to call it moral, teetering on ethical. It wasn't even ethical. It was the limitations I felt for the trainers. And what I mean by that was in order for me to be able to run a sustainable business, a profitable business, you could not pay trainers very much. I mean, you could
Mm.
not pay them well. And we were working with affluent clients. So, I mean, the number of gyms, I mean, if you look at them statistically nationwide that open and close, and boutique training studios, I mean, the
Yes.
attrition rate is just, it's
Yeah.
horrendous. And that's one of the reasons why. About the only way it can ultimately be profitable is if you're not paying people a livable wage, or if you're working independent and you're able to charge much higher rates working with a very specific audience. And I'm curious, like in an environment like that, I think, I hadn't really thought about it till now, but I think it was one of the things that was weighing on my heart space more than anything is I wanted to be able to provide and pay my trainers more. And I tried to do a lot of other things to offset it with bringing in healthcare plans and things that are very uncommon for personal trainers and stuff in the fitness industry and 401k and so on. But it still never felt like enough because I'm like, I know at the end of the day, they're not going to be able to afford more than an apartment. And even with the progressive growth tracks and everything I built out, it was never going to be enough. Now, maybe part of that was my enough. So as I'm talking, I've talked myself to my own conclusions. Maybe that was a component of it.
Yeah.
But there's the other side of, it's one thing if it's a remedial position, and I don't mean this to be insulting to anybody listening in any context, but if you're doing a job that's very basic, that just about anybody can do, I don't want to name any particular category because I don't want to put a container around it, but
The
we all know
commodity.
those roles and positions, right?
Yeah, it becomes a commodity, and
Mhm,
that's what you're up against, right? There's
mhm,
nothing that differentiated you from the guy next door and the other people in the industry who are providing the same thing. Even though you're making these offers and you have these offerings and these additional things, there's no core behind the philosophy, and that makes it unique and different. That is a differentiator across the space. So when you have a noisy marketplace, you've
mhm,
got to be different. You've got to
mhm,
stand out. You've got to connect to that that raison d'etre, the
mhm,
reason for being, why you're there. And it doesn't mean that you get big. Sometimes you have to go back and you have to
mhm,
get really down to the core. What do we do? Who do we do it for? How do we do
mhm,
it?
mhm.
Right? And so what you're speaking to, or what I hear that maybe isn't expressed is the acceptance that this is just the way it is, right? And so challenging that, and I hear this a lot from my entrepreneurs. You don't understand the market, or you don't understand the industry, or you don't understand our business, right?
Oh, I've heard that countless times as a consultant. I get you. Yeah.
You just don't understand
Sure.
this is the way it is. I'm like, but what if we challenge that? What if we go a little bit deeper? How do you know that's true? Where's the evidence of that? And so it is challenging, but the other side of it, I think, is, well, it's that friction. Where is that friction? Where are you stuck? Where are you feeling like you don't have options? And then what do you need to do differently? And so if we can get to that place around mindset where the potential is there and we just need to figure out how to tap into it. Sometimes we have to go internal in order to figure it out. Why are we doing this? Sometimes we're the ones, we've gone as far as we possibly can. And I've been in that situation. I started a tween girls clothing company when my daughter was 10, and she was in fourth grade, and she was 5'8" already. And so nothing fit her. Yeah, she was 5'8". She was super tall, but she was still hanging upside down from the monkey bars. And so like nothing suits her. And after a 3-hour marathon shopping trip, she was like, Mom, there's just no way. Do you not get it? I was like, oh, okay. So I went down this path. I knew nothing about fashion. I'm an anti-fashionista, but I thought this is a business problem I can solve. So I was going to go into it wholeheartedly. And I learned a lot and ultimately failed in that endeavor. And I still think it's a great idea. I would love to talk to anybody who wants to do that, but I've learned a lot. And what I decided was no matter what I did, it wasn't gonna be enough. I could continue putting money and resources and time and effort into this. And I just needed to find a different way of doing it. So I ended up closing it, shutting it down, and donating all the inventory. I don't recommend doing that. There's a story about that, but sometimes we just go as far as we can, and we don't know what we don't know.
I think that's an absolute law that everybody should have tattooed on their forehead. We don't know what we don't know. Because it's true. Because I mean, as you're talking again, that was another thing that I realized is another aspect of the industry that had never really occurred to me. I think just because I had such longstanding passion and enthusiasm for it, which has even waned, at least from a business perspective, is I didn't realize how transient those roles are. I mean, it's very uncommon for anybody to stay in the industry longer than 2 years. I think I had an average 4-year tenure for my employees. I mean, we like decimated the industry average. So there was a lot of stuff we were doing right, but between the transient nature of the roles, people usually moving on to pursue some other different skill set, sometimes in parallel, sometimes not, and not really being able to provide while we were doing a lot of good and had built a profitable business, there was, like I say, there's a lot of stuff I didn't even realize until this conversation was weighing on me more heavily than I'd ever anticipated. Now, one thing I'm curious about, I want to go back a little bit to earlier in our conversation. You're talking about whether it's a startup or $100 million company, fundamentally we have a lot of the same problems. It's just at a bigger scale.
Yeah.
Are there certain benchmarks, levels of achievement where businesses need to start asking a different question as it pertains to their finances? And maybe it's the timing of when it's appropriate to bring on a CFO and level up and again, I don't mean this in a negative way, but when you need a broader perspective than an accountant may be able to provide, or are there different problems relative to this stage in business that they might be able to better anticipate so they can ask a better question as they're reaching some of these levels?
Yeah, I think definitely when you get to a place where, so in the investor space with my real estate investors, when you're using other people's money, you better have your numbers dialed in. And so that's absolutely 100%. If that's what you're going to be doing, because you got to prove to them to get preferred rates, you got to prove that you can bring it and you can do what you say you're going to do. And so I think that's one level. So let's talk about levels. Like we've got to have basic financials in place, no matter how big you are. And whether you're doing it because you're, under $50,000 so far and you're just starting out, or you're hitting the higher levels. In my industry, it's pretty easy to get to $1 million. It does not mean you've got it all figured out. And the number one thing that we're doing is cleaning up and trying to get the numbers accurate. So I said at the beginning, we have an unprecedented opportunity because of the technology around accounting. There's no reason for us to be waiting 45 days to get our financials produced, right? And so you absolutely cannot. The other thing is you've got to know whether or not your deal analysis is accurate. And so your financials have to tell you whether or not you're measuring up. And so there are a lot of ways that you can accomplish that. You can do it on your own, or you can get somebody else looking over your shoulder and say, okay, this is right, or this is not right, or what was your plan and how does it compare? So I talk to a lot of wholesalers who have fantastic systems. They're going super fast and they're turning things quick. They have no accounting for it. And so I don't know if their outside systems are actually producing what they think they are without the accounting. So you got to have it in place. I would say also by the time you hit that $1 million mark, you should be forecasting. You should be looking ahead. We should not be looking behind trying to figure out if we were right. We should be looking ahead at how many deals can we do? What's our capacity? Where are we going to hit cash flow issues? And as a CFO, being able to do a 13-week, forecast matters a lot, because 1 week, if your property doesn't sell in the 7 days you think it's going to, what is that going to do to your cash flow? And how many deals do you have coming up where you're hitting that peak on your flip, on your rehab, and you've got no cash and you've got to go to a third party? And I see this happen a lot. People go to a third party like an on deck, and they're spending 21 plus in interest to get a $100,000 loan to cover their operational expenses because they got hung up somewhere in a project. So if you're experiencing any of those things and you have a bookkeeper, you may need to be looking outside for somebody who can analyze things for you in the business, or at least sit in that CFO seat and give you an idea of where you're headed and where the hiccups are going to be, and smooth out that road, because we're in a place in the marketplace right now where we don't have a lot of capital excess, right? So our mistakes are really, really glaring, and they come out really, really fast. And so you need to get ahead of that. And that's the best answer I can give you. I wish I had a better one for you.
No, that's great. That's actually extremely helpful. I mean, what is another thing I'm curious about? Oh, one thing I want to say is this is one of the beautiful things that we have today that I think was less common even a decade or so ago, is fractional roles. So now we have the opportunity to start bringing in some of these higher level resources without the need to employ them full time. So it creates greater accessibility. So I love what you are doing in that context. So thank you.
Yeah.
One thing I want to ask, because I'm sure you get this all the time, at least on some level, it seems like for small businesses, you have one option, which is something that rhymes with fast looks, as your predominant, bookkeeping software.
Yeah.
And it's not until you can afford much higher level enterprise level softwares that you can, actually get, a better system for, well, data input, analysis, aggregation, everything. So,
Yeah.
what are some of the challenges? Because it's just from what I've witnessed and experienced, regardless of what business I've been in and what size of the business, if you're stuck with the fast looks, it creates a lot of headaches. And you're trying to get to this point, which is going to increase the expense, but you're going to get a lot better data and information from it. Where is there anything that can be done to prevent that? Or does that really all come back to the people that you had, the who that you have at your side, and ensuring that the right data is going in, they're double checking the numbers, making sure everything lines up, and that's it?
That's what it is. Like, I think there's a couple of things that can be improved. And so in our process, we have an inventory kickoff meeting. And so we're looking at what's your tech stack? Where do you house your receipts? We need to understand that. And one of the things that makes us different is we do weekly accounting. We don't wait until the month closes out and then try to get you reports by the 15th or the 25th. We should be doing it all along so that any time during the month, you can run your reports and see you're about within a week of accurate, right? So that's our goal because technology allows us to do that. Even regardless of which tool you're using, if it's, the one you're mentioning, which I feel like it's Voldemort. We'll
Those who must not be named. Yeah, exactly.
The one who shall not be named.
Yeah, that's awesome.
So whether you're using that or you're using Airtable and it's all being done I mean, you could do it that way if you've got the skill to be able to do that. A lot of our entrepreneurs are relying on outside tools like Google Sheets or Excel in order to make sense of what they're seeing. And so there's a tool that we link to and use that goes from our accounting software to a Google Sheet to create a dashboard to show us exactly where we're at. And we're really trying to simplify what that looks like from a business owner's perspective.
Oh, this is a great question. If you don't mind me interrupting you right here, because this is the thing I was thinking about is I don't remember. It took us forever to bring on a point of sale system because we couldn't find anything that integrated properly. And then even though it was supposed to integrate properly, all it did was pull the actual sales reports and financials and customer name, but there was no association with what inventory they purchased. So now you had two systems that don't really fully communicate, and you had to go different places to get different data, and it just becomes a nightmare. So long-winded way of painting a picture to say, how advantageous is it to call up a fractional CFO and say, hey, I'm looking at integrating these new technologies. I understand the benefits, but based on my current tech stack, I don't know what to go with. Is that something that you help provide guidance on so people aren't trying to undo all the problems that they create unknowingly?
Yeah, 100%. Yeah, that is something that we do. And so understanding, like there are tools out there, and this is super in the weeds, but there are tools out there where you can connect on one side. They do both. It's Tapalti as an example, where you can do accounts payable or accounts receivable, but you can't do both. And then there are tools that will do both, like Bill.com. So understanding what is the fundamental problem we need to solve for? Is it capacity? Is it timing? Is it detail? What is that issue? And then what are our resources? Who's on the team? What are they doing? How are they doing it? What do we need to do? So I just have been working over the past year to get a really good system from a CRM system like you were using for your point of sale into the accounting software. And it's a little bit of a manual process. We're looking for a way to automate that, which we can, but we're not at a revenue level where that's the next move. And so the business owner wants to go to that level. We're going to do it, but not yet. So it's a timing thing. So having that outside perspective of knowing, is this the right time to be investing in that? Or do we have other priorities and somebody who can hold that space for you and say, you said this was the priority. Let's not do that yet, but let's get our ducks in the row and do the exploration to figure out what we're going to do and when we're going to do it. So,
what a great resource. I mean, to be able to have that level of strategic guidance, because we don't know, like we said, and and the thing that you think could be the most advantageous for your business right now can end up becoming a bigger headache or expense. Ask me how I know. I've made this decision on multiple fronts across different contexts. Thankfully I learned and was able to survive some of those decisions, but it also cost a lot of time, money, and headaches. So I think that's another really simple thing that I hope everybody's taking from this is if there's any part of your conscious or unconscious mind that is going, I'm not sure if this is the right decision, my gut says it is, it's always wise to get an unbiased third party's perspective that is an expert in that particular area. And I think, Stacey, you would be an outstanding resource. So, I want to say, thank you to our audience for spending their time with us on the Perpetual Growth Podcast, and a big shout out to Stacey Seguin for bringing so much value to today's conversation. Stacey, where can our listeners connect with you or learn more about what you're working on?
The two best places are to connect with me on LinkedIn or at the website, omyroi.com, and find us there.
Excellent. And we'll make sure that we've got those links and resources in all the show notes and everything for you guys, so you can reach out to Stacey. And I would strongly encourage that you do, particularly for those small businesses, because I've been there. And like Stacey, I worked with companies that were, well, I owned companies that were sub 1 million for a period of time, and worked with companies doing 8 and 9 figures. And the problems don't necessarily change a lot. They just expand. So if this episode sparks something for you, don't keep it to yourself. Be sure to share it, subscribe, leave us a 5-star review, and help us reach even more people on their growth journey. And remember, growth doesn't happen by chance. It happens by choice. We will see you next time.